Hi, this is Zak Mir with a review of the top FTSE 350 rises of the year to date. And like my recent review on the small caps, you'll see that most of these companies are companies where the turnaround seems to have come off the back of oversold sentiment or overly negative sentiment rather than necessarily the fundamentals. Starting off with ASOS, where we have been told that there's a bear in there looking for the shares to fall. So far, you could say that from the beginning of the month, the bear's been right, so from 7.50 down to around £7. If we break the 680 level, recent support, in a convincing way, then the target could be down to as low as £5.50 by the end of next month. That's said on the basis that both the 50 and 200-day moving averages are now both falling, and that would imply we're heading into a negative or a dead cross. The other point to note is that we had a double top back in February and March, and then the double top finished with an unfilled gap to the downside. Again, another negative situation. So even though ASOS is one of the rises of the year to date, it may not stay like that. If you are a fan of the shares and looking for the shares to reverse, then it would really want to see an end of day or a weekly close back above the 200-day moving average. That's currently around £7.35. Another twist in sentiment has come from Aston Martin, which was obviously not looking very good after its rather badly executed IPO a few years back. Current situation is that we are trying to bounce off that rising trend channel from September. The trend line there around £2.15. Above that, we're looking for the shares to revisit £3.50 and the top of that rising trend channel from last year. If you're cautious, maybe you'd wait for an end-of-day close back above the 50-day moving average. That's currently around £2.30, and the RSI to break back above the neutral 50 level before deciding it's safe to go long again. On the downside, below 215, the risk is of a test of the 200-day moving average, currently at £1.70. Next situation is stock which has gone from being loved and hated, alternating over many years. At the moment, we seem to be in a more popular type of vibe for BT. Here you can see there's been a rising trend channel since the start of the year, and we've had good progress within that. Currently, the floor of the channel around the 50-day moving average at £1.47, the top of the channel there as high as £1.75, which would be the target for maybe as soon as the end of next month. Nice bounce for the RSI above neutral 50 as well, and recent support holding around or just above the £1.50 area, which is actually higher than old resistance that we had back in March. Moving along to stock which has had the roller coaster of the pandemic, etc., etc. At the moment, we are looking to be in a consolidation mode after the bounce that we had at the beginning of the year. We've got a rising 200-day line at £4.09, and the current battle here for EasyJet is to get back above the 50-day moving average, currently at £4.94. If we can do that, then we'll be looking at the top of the range, as high as £5.30, maybe by the end of next month. But the consolidation since January, reasonably steady, and that rising 200-day line suggests that we could see a fresh leg to the upside. If we do, it's most likely to be within the rising trend channel I'm about to draw. So that's heading towards the £6 area, and maybe that's a decent end-of-year target, even though at the moment we are just consolidating around or just below the £5 level. Stock which is one which probably is not looked at that much by investors but has done rather well is Flutter. And here you can see the progress within that rising trend channel from this time last year. Top of the channel currently heading towards as high as £1.90, which one would hope would be achieved over the next 3 months, maybe 2 to 3 months, while we hold above the floor of the channel there around £1.45. So above £1.45, as high as £1.90 over the summer for Flutter in what has been a very persistent rising pattern. Probably one of my favourite stocks of the selection today is Hilton Food. The reason for saying that is that we had the gap down September, October, rather calamitous one, and the shares managed to regroup by the end of the year, gapping through the 50-day moving average, which is a signal which I wish I had seen, and then finding support at old resistance from November around the £6.50 area. We've broken above the 200-day line at £7 at the end of the week, and above that we're looking for £9 as soon as the end of June. So let's see if HFG can step up to the plate on that basis. Moving along to a stock which is in very strong recovery mode here, 3i Group, rising trend channel from the start of the autumn. New support for the shares at and above old resistance around £16.80, and above £16.80 we're looking for the top of that rising trend channel from August last year. Size £20 over the next 2 to 3 months, could even be over the next 2 months while we hold above £16.80. On to Marks and Spencer's, which I think the headlines just seem to be basically mentioning the closing of shops, but here we've got the shares bouncing off the 50-day moving average. That's rising around £1.59, and above that looking for as high as £1.95 over the next 2 to 3 months. Nice bounce off the RSI 50 level, and we have that gap. We had that gap back in March, which was a positive signal and continues to back the price action. If you're cautious, you wait for an end of day close through the line of resistance that I've drawn there around £1.65 to take you up to £1.95. Moneysupermarket is next. Obviously not quite the same kind of supermarket as Marks and Spencer's is, and here stock which seems to have been a winner in the cost of living crisis. Top of the channel there up to £3, which we're looking for by the end of next month, while we hold above recent resistance at £2.57. Good RSI price action at and above the neutral 50 level to back continuity on the upside there. Pets obviously very important to the great British public, and here you can see that we've had a rising trend channel since the autumn. Above the floor of the channel around £3.74 rather, looking for a break of £4 and a move up to £4.50 over the next 2 to 3 months. Rolls-Royce is next, and clear winner in terms of the Ukraine disaster that we had from last year. Current situation is that we're in a broadening triangle overall. If we go back, and you can see the broadening triangle in place basically since the early part of 2020, top of that broadening triangle heading towards £1.90, and we're looking for the shares to remain above the 50-day moving average at £1.47 ahead of a move up towards that area. There is some resistance from March, so you could draw a resistance line there to be broken as a momentum signal, end of day or weekly close through £1.53, and that line could do the trick in terms of giving us a new leg up for Rolls-Royce, but it looks like we're in a sort of triangle continuation pattern, and that should resolve to the upside. Top of that channel, relatively close to the big picture target there at £1.80. Moving along to the last few, Senior Engineering, and here you can see that we've got a rising trend channel again since the autumn. Recent resistance rather around the £1.68 level needs to hold above that to give us a target towards £2 by the end of July. So looking for a 2 to 3 month time frame on that for Senior Engineering. Surprise candidate here, obviously a company which has been hit by the fallout regarding Brexit, the cost of living crisis and various other aspects. But you can see here the turnaround here came in December, and basically it's been up and away ever since. New support coming in well above old resistance, and the latest break of recent resistance at £7.40 should take the shares up to £9 as soon as the end of next month. So a very strong looking chart there, and quite surprising that it's looking so strong. On to Wizz Air, the final candidate. Here obviously getting a bit of the EasyJet momentum as well. Here the shares gathering strength at the £30 area, and have done very well around that area, and looking for the shares to hit as high as £40 over the next 2 to 3 months while they remain above the £30 area. So stop loss on there maybe down to £29.50, but not expecting anything lower than that ahead of a move to the upside. That's it for me today. More updates during the week.